GM friends, and thanks for joining DeFi-Logic's TA Saturday, every Saturday at 12 p.m. Mountain Time. DeFi-Logic is the crypto think tank for better decisions. As a member of the DeFi-Logic server, you can join us every week, request chart reviews, and discuss the call in real time as well. In today's community call, we'll review charts for DOT, XRP, GMX, as their V2 beta is now live, MEVFREE, Ethereum. Will also touch base on the S&P 500 and DXY, touching on the yield curve correlation, BTC, the Grand Bitcoin, YUAN, and Ruble due to the BRICS Summit this month, and lastly, the total market cap. And let's get started. Over to you, Cryptix.
Welcome again, everybody, to TA Saturday. Quite a lot to go through today. As Christine said, I'm going to go through .GMX, XRP, MEV, and I will finish off with Ethereum. So firstly, we're going to have a look at DOT. And that is because basically a significant milestone in the evolution of blockchain technology has been reached with DOT, and that's the launch of Polkadot 1.0. And it aims to be at the forefront of pioneering block space composability and scalability. So therefore, we're going to look at how the TA in DOT might reflect this breakthrough in blockchain technology. So let's have a look at the chart. And so we're starting with the daily chart, and immediately from a TA perspective, it looks like we have here, we don't actually have a lot of interest. We have a completely descending price here, descending volume as well. It just kind of looks like everyone's given up on the token. However, with the launch of Polkadot 1.0, we might now start to see some more attraction in the coin. However, from a TA perspective, this little support level here that's been tested quite a few times looks to me like a magnet. It's a simple range play. We've touched this resistance here, touched the resistance, and we're broken down completely. Honestly, as a range play, I would have expected DOT here to have at least reached back up to the resistance again. So this screams weakness. So I think personally we're going to go all the way down to this support. Now the question is, will we bounce again like last time? I think we will, but be wary of this, because we could break down here, take all of that liquidity in the remainder of this order block, which still remains untested. So round down about 3.590 and then run it back up. But on the converse, watch out for this breaking. So I just want to look at this pattern here. Let's just do some standard TA. So there's a clear diagonal resistance here. Watch out for this to breaking, because if we see this break with volume, we want to buy the retest and then scalp it up to this resistance level. And that could also be a good potential, because if you look here in this downward structure, we do have a decrease in volume on the back of it. So this suggests that sellers are potentially starting to get exhausted, and so we could be due for an expansion. I think if we hit this resistance level again with volume, we will take out all of these tops here. But in terms of a trade, I would be going at this monthly support level here. So it's all about patience, or I would be observing. And this is a high time frame play, so this could take out over the next couple of months as start into the bull run. And speaking of the bull run, actually this coin did really, really well on the last bull run. Look how the mammoth gains that it had. So in terms of accumulation, yeah, it's probably a good idea to accumulate, do a bit of DCA, start absorbing the spot here, ready for the start of next year's and the year after's bull run, and we could see potential DOT all-time highs again. But that is DOT really. It's all about patience that I'm seeing on the chart. There's nothing that's immediately striking my interest. So I now wanted to have a look into GMX. Now version 2 beta of the GMX is now live. So it's basically a fully decentralized perpetual exchange. So it's offering more assets now and more deep liquidity than has ever been seen. And so we want to really delve into how that correlates with the TA on the coin, or token rather. So on the last stream, I did say that we were probably either going to consolidate here and range up, or we were going to break down back down to this support level here, and we absolutely did. We broke down and we hit perfectly onto this daily support level at 49.15. If you brought spot here, congratulations. You would now be up a very standard 7%, but profit is profit. So congrats if you did accumulate anything here. In terms of a range play, yeah, just hold now until it reaches this level again, like it has in the past. Because what we might see now, the markets are very stagnant at the moment, despite all of the news and breakthroughs. It's going to be a very sideways market. So just bid the support levels and sell the resistance levels. I mean, even with the launch of the version 2 beta platform, in terms of interest and volume, there hasn't been that much of an expansion. I mean, honestly, with a development like that, I would have expected more interest, but it pretty much looks like it's still just ranging. Let's draw just one of these standard trend lines. Yeah, definitely sell here. Definitely sell there. If it comes to that resistance, buy again at the support. I would only go spot, though, again, don't use leverage. If this diagonal, that probably could be extended. Have we got confluence there? Slightly, yeah. If this diagonal resistance breaks at this resistance, then this support will then actually that's resistance now. Let's change that. So that's now weekly resistance. Yeah. So if we end up doing this and then we break here, break both the diagonal and the horizontal with volume, then you could confidently say that this resistance is becoming a support, and then you could easily buy here, ready for the next range play. So just range play it. But that's all that there is to say, really, on the T aspect on the high time frames for GMX. Congratulations if you brought here at the level that I drew out for you quite a few weeks ago. So the next coin that I wanted to look at was MEV, and it's the MEVF pair, which has seen a substantial increase. I know some of the guys on the server managed to get in pretty early with the pre-sale. So, but what is the MEV token? But if I'm looking at some of the research, the token prices have been surging. Considerable discussion on Twitter. These Telegram bots have emerged as a new narrative. So it's about basically it's another narrative play. And it allows users to execute a range of functions as easily as sending messages on Telegram. And the bots are very user-friendly alternative to the existing decentralized finance applications. And so this MEV token comes in here, and you can clearly see how much of a narrative play it is. Let's get the expansion level. Yes, I mean, right from the opening price here back in February, that reached a total of 7,341%. So for anybody that brought during this, what looks to be some sort of accumulation period, you are sitting on a pretty hefty sum. Even if you held just to this pump here, that's a fantastic gain. So congratulations if you got onto the pre-sale with that. Now, from a TA aspect, this is crazy. I wouldn't buy here at all. You would be simply exit liquidity. Looking at this, it just looks like it's going to end up being a complete blow off top. We might see higher if the narrative continues, but eventually it's just going to come crashing down. And if it does come crashing down, the instant support level now that I see is here at the break of this structure. I don't think it will come directly down to here. I think potentially it's going to get front run a little bit higher. Probably at the top of that wick will get front run. But from here, it's probably best to make it into a box actually with this coin. So if it comes into that green area, which I think it will, because it looks like a very standard blow off top pattern, this could be the area to accumulate again, ready for the narrative rerun. Because usually with these narratives, they'll die and they'll get restarted again, ready for the next run. But that's MEV. It's definitely not an area to buy, and it's certainly not an area to short either, because it's far too volatile. That's even if you can short it. You probably can't even short it, to be honest. But yeah, if it comes down, that's nice, 69%. Yeah, wait for the retrace, because buying here, you are just being exit liquidity. Now I want to look at XRP. It's a very standard coin. XRP is one of my favorites now, especially since I've developed the new algorithm for it. And we're looking at XRP because some of the headlines now, we're seeing that Ripple actually now intends to fully re-engage with US markets since their partial win in the SEC lawsuit. Therefore, we could potentially see the price on the one-way route to a full recovery. However, is that what the TA says? I know there's been a little bit of doubt amongst some communities about the ruling. The SEC, I think, have appealed, which is, I think, what we're seeing here. But this is unfortunate, to be honest. We're breaking down from this structure. It looks like people are starting to just panic sell, to be honest. But that is what it is. It has broken down. I actually thought, based on the news, that we would have changed this level here at 0.7038 into a support level, and I actually thought we would have just created a range, at least just a range, ready for higher and started like a new uptrend. But with this breakdown, it looks like it wants to go back down to 0.5839. So it looks to me like this level here is a magnet. It's a clear support level now. So if it comes down to this level, it's a certain buy for me. I don't think it will go lower unless Bitcoin and Ethereum decide to nuke. But if it comes to here, this is a definite buy for me, at least some sort of accumulation. And you could accumulate in this entire box, to be honest, ready for the next impulse up. This, of course, all becomes invalidated if the judge's ruling gets overturned. You're very much likely to see probably a cascade liquidation of that. The other thing I've noticed is the decrease in volume here. So I think this sell-off here potentially could be just a liquidity grab as well. This is another scenario where we break down from this structure. We've taken this liquidity, because this is quite a high volume liquidity candle, and then we just send it back turbo from here. So be careful shorting mid-range. Having said that, if we go down to the lower time frame and have a look at the algo, let's just get rid of the drawings. There we go. So the algo has actually entered into a short down here that's currently not in profit. It lost a long here, but this is only a short scalp, and the take profit is around about that support level that I've spoken about. So if we do decide to nuke, which has a possibility due to this acting like a magnet now we've broken down, then it will take profit here for a nice trade, and I think we'll end up reversing back. Just a couple of things to note. The algo now has the ability to flip from long to short. So we entered into a short here, for example. The algo thought it was going to reverse mid-trade, so it entered into a long whilst capturing the profits from the short. It was unfortunate that we still went down, but that algo now has that ability. So the idea of it is to capture the momentum of the market if it's in a mid-trade, because not every trade is the same. So therefore, every trade is different. If you enter into a trade and a couple of days pass by and you're still not hitting the take profit, the market conditions have possibly changed. So you could be left back holding. So the algo now looks into the trend mid-trade and flips from long to short if it thinks the market might go in the opposite direction. So that's a new interesting feature with the algo. Still in testing, so please only use these signals with your own TA. But these were some lovely shorts here. Short at the top, profit, another short, profit. So it does have some good trades as well. And I just wanted to lastly pick up on Ethereum. So Ethereum, yes, it's not very interesting actually. It looks pretty weak, very weak in fact. This ascending triangle here, I really thought that Ethereum should have touched the top. You know, it should have at least taken the liquidity here up at the top of the magic triangle going up. But it didn't. It's actually rejected already, and it looks like it's just had a constant slow bleed. And I'll be honest, if we lose this structure, if we start coming down here and we actually lose this trend line, it will bearish retest and it will continue to go down. And where it stops, it depends on the buy. So you need to look at the volume and the levels, just play it level by level. But we need to keep an eye on this trend line here, because if Ethereum starts to break down from this gigantic market structure, then you could potentially expect the bear market lows to be retested. Conversely, if we do get a catalyst, and if CZ starts twapping again, lovely, that should then reach the top of here. I've currently started to DCA back into my spot holdings. That's not financial advice, because at the end of the market could go either way. If buyers are found, the price goes up, and so on and so forth. But that's pretty much it from the TA perspective.
I hope everyone is enjoying using the XRP algo and trying the new capability of flipping it from short to longs. That's impressive. And I'll hand it over to GForce to cover some important areas in the legacy markets.
Hey, thanks, Christine. Today I'm going to cover the S&P 500, DXY, and Bitcoin like I normally do. And then I'll add some new ones. I'm going to do the crypto market cap without Bitcoin and ETH. Another thing that's going to be very interesting, we're going to be doing looking at the inverted yield curve of the 3-month versus the 10-year and what that tells us. It tells us a lot. And then by request, I'm going to look at the YUAN and the ruble, because the BRICS are meeting this month in South Africa. So starting out with S&P 500, we actually had some activity. Volume is level, but we have volatility that's really spiking up. If you guys follow the VIX, it's been in a range between 13 to 14 for several months, long time, and now it popped into the 16 to 17. So this is a daily chart of the S&P 500. Like I said, I always like to do the daily chart. It gives us more information. So Monday, basically, after months and months of hitting 52-week highs week after week, we are now starting to pull back a little. Monday was a small inside day. Then we had a down day on Tuesday a little bit. Then on Wednesday, we had a major sell-off. That was the downgrade. I don't know if you captured the news or saw the news that rating company Fitch actually downgraded U.S. bonds from AAA to AA plus. And I saw a clip with the Shark Tank Kevin O'Leary. He had comments on this. He goes, even though AA plus is still decent, because it's not AAA. And that sends a message. And he said, do we go, and it's my thoughts exactly, on do we go from, AAA plus, and then next year AAA, and then following year just, AAA minus. So it's a slope that's not all that great to be on as far as the U.S. and their spending habits. So we had basically Wednesday major sell-off, which actually went down to the standard deviation line. So this black line here is a standard deviation line, and it's running, it's a live line, so Bollinger Bands are live indicators, so it will move, and it's moving up, but it's going to start to flatten out here. So this is that 45.25 area. We move down to that line, and then on Wednesday, like it's supposed to, it will close around that line, which it did. Thursday, we opened below, ran all the way back up to that line, back to the 45.25 mark, and then closed lower. Then on Friday, which was yesterday, we opened up. The candle went all the way above that, tried to test the high, and then we had a late day sell-off, a major late day sell-off. So basically, it is coming to that standard deviation line. It's testing it, see if it could go above it. On Friday, couldn't go above it, and this coming week, I think we're probably going to go lower. We could go down to this Bollinger Band, that's the lower Bollinger Band, which basically is 44.31. That is a possibility, but again, this is live indicators. That Bollinger Band will go up and it'd be more like 44.40. That's a strong possibility. Next, I'm going to DXY. DXY is doing exactly what it's supposed to do. Since there was a double bottom here in the middle of June, it ran up. Since it cleared that, you can also look at a double bottom as a W. It cleared that midpoint, and the W ran up to standard deviation line, did a double top at that standard deviation line. And again, one day it blew past and blew below that midpoint, and it's dropped ever since. Gone all the way down to the 3x lower band, travel around there, and then as I said, it would go up to that standard deviation line. So it tested it, on that day, which was a Wednesday, and then blew through it last Friday, and it's gone up ever since. It's supposed to go up. It should go up, and I might hit back up to that upper Bollinger line at 102.925. It might, but we don't know what's going to happen with that downgrade that happened this week. So this with the dollar index, we might not reach that point, and we might go back down to the standard deviation line, which is 101.196. My next chart is Bitcoin. It's not looking that great. As I said last week on Saturday, that it's just stair-step down, and it's also stair-stepping down. Again, these are daily charts, and you'll just look. It gives us more information and actually more clarity on the information. So this stair-step down just continues to go. As Cryptix said, it could be because of all the SEC cases, especially against Ripple, and if it's going to appeal, which looks like it's going to do or try to, everybody sees the headlines and they get scared and they walk away. This now is the 3-month market cap without Bitcoin and without Ether. So basically, it's looking the same. It just comes down, hits the standard deviation line. Since that standard deviation line was moving up, it's trailed across there, and then it's dropped ever since. This is not looking good either. So I don't know, again, because of the SEC's big hammer that they keep hammering on these cryptocurrencies and these crypto exchanges, and it's creating a lot of fear. But that seems like what is going on with the price action on these charts. So this is dropping down. As you can see, it's moved away from that standard deviation line. That standard deviation line has moved downward, and it's run down and run down the lower band here with also the 3x band as well. So that is the crypto market cap without Bitcoin and without Ether. Next is, I think, is one of the most important charts I'm going to do today. This is inverted yield curve of the 3-month yield and U.S. government issued treasuries versus the 10-year. So we're looking at a 3-month yield versus a 10-year. So you would think you get more money by buying a 10-year treasury instead of a 3-month treasury because the time frame is so short with a 3-month. But that is not the case anymore. And the inversion is when the 3-month treasury yield is higher than the 10-year treasury yield of the U.S. Treasury bond. So what that's telling you, it's not smart money going into the 10-year. It's getting a better risk on a 3-month. Now, this is the inverted yield curve. This is the chart. Now, the funny thing is, and it's not that funny, but this indicator is 100% accurate. It has never missed when it's predicted a recession. And this is what it does. It does predict a recession. So when it gets below this baseline black line is when the 3-month yield actually pays more than the 10-year yield. Okay. Now, this chart I showed it, this happened back in June of 2019. It predicted a recession back in 2019. Now, this prediction, basically, it says the prediction can unfold between a 6-month period to an 18-month period. So it has 6 months to 18 months for a recession to happen. Well, this was June of 2019, and it tried to retest, and it dropped back down. Now, June of 2019, I was trying to, why is it doing this? I don't see a recession. I don't see any economic news. I don't see any issues going on. And it dropped down. Then it tried to rebalance itself and come back up, which it did across that baseline. And then basically, this gray section is COVID. This is January of 2020. COVID hit, okay? How in the world did this indicator predict the recession during COVID or even predict COVID? But it did. I don't get it. I don't understand it, but it's 100% accurate, like I said. During COVID, I don't know if you guys saw this or remember this, oil prices went to a negative $38. Negative $38. So nobody wanted to buy oil, and they were paying people to store oil because the cost of storage was going up because the economies, global economies around the world were going down. Nobody was buying. Obviously, we're in lockdown. The commodity traders, they had to reprogram their systems, their computer systems, because they've never before anticipated a negative price in oil. So there was a lot of things that went on, and this indicator predicted it. Okay, so now fast forward to the right part of the chart. We're looking at, this is October of last year, gone down. So we're looking at 6 months from October. Okay, you go to April. This thing continues to go down, which means the 3-month is paying way more than the 10-year. Again, the prediction is between a 6-month and an 18-month period. So we have a few more months to go. We have the whole 2024 election coming up. I'm not getting into politics because I don't do politics, but it's not looking good. And we've had a few rumblings here and there on the economic side, but this does not look good at all. And we could have a major recession going forward. Next chart, since the BRICS are meeting this month in August, they're meeting South Africa. The BRICS are basically Brazil, Russia, India, China, and South Africa. So they're trying to do a legitimate alternative currency to the US dollar, global currency. They're struggling though. There was an article a couple months in the Wall Street Journal where they established over 5 years ago a BRICS bank in Shanghai. And that bank is now having to sell their currencies to buy US dollars to basically support the bonds that they put out to other countries because the interest rates are going up, they're having issues. So it's funny that the BRICS Bank is actually needing US dollars to stabilize themselves. This is the Chinese yuan against the US dollar. Again, this is a daily chart. It's all the way back to the first part of this 2023. It's gone up, did a double peak, but the second peak is lower than the first peak, so it's a lower high and it's trailed down. Here we go. We actually have another double peak, and the second one is higher, but it's come back down to that standard deviation line and then it's dropped. Now, a lot of this is all news driven, so it's hard to do very accurate TA on these when we have geopolitical news going on. But you can see China's having economic issues, a recovery from the COVID lockdowns, which they've had massive lockdowns time and time again, and it's just the Chinese yuan has just gone down. The Chinese yuan is also called the renminbi. That's the official name of it. So if you're saying, well, it's not the yuan, it's renminbi, it's actually both. It goes back and forth. So it touched the standard deviation line and it's dropped down, and it's trying to come back up, and we'll see if it gains any momentum. The next chart I'm going to do is the Russian ruble. So again, the first part of this year, 2023, we all know that Russia invaded Ukraine back in February of 2022. It's gone down ever since. And this is also just this year to date, and it's just going down. Hit a double peak, flattened out. This is a U basically in double peak, but it's also gone down because of the news. The news is war driven. The news that comes out, how the war is going, what's going on, is driven the ruble further and further down. So that's my last chart. I will hand it back to Christine.
Thank you, GForce. That was definitely an information-packed call today. And that's it for this week. Remember, as a member of DeFi-Logic, you can post requests in the Daily Dose forum, and we'll review your coins, assets, and tradable proxies in the next call. Also, DeFi-Logic members interested in alpha testing our spot trading indicator and new XRP strategy developed by Cryptix, the service is free until we launch. Thanks for joining, and we'll see you at 12 p.m. Mountain Time next week. GN friends. Join us next week in Discord for TA Saturday at DeFiLogic.com.